to the Stock Market Morning Prep video for Friday, June 11th. Well, we did get a pretty big scare yesterday coming out of Europe. Portugal Bank may miss their debt payment, and that sent markets down throughout the world. Actually, in the early morning session, at least in the U.S., markets really took it on the chin. While I was recording the previous video, we were down 15 and a half handles. I think we went down to, almost 20 handles in the ES electronic contract before the market opened. Had a little bit of follow through, and then yet again, buyers of dips come in and bought the market up a little bit on not so convincing volume. However, meaning to the upside, not the downside. But we did have heavier volume on the downside as we progressed lower in the first hour, and then the market started just kind of gradually going higher. And then a lot of people, like even myself, scratched my head, said, "All right, well, wait a minute. The market's running higher now. Let's wait for that pause and then that reversal candle." We never got it. We just continued just to grind higher. So I'm thinking maybe market participants thought it was no big deal. We did have some nasty numbers come out, econ data that came out also in Europe that wasn't pleasant as well. So that also fueled some fire. And Asia had some econ data come out as well, and that wasn't great. So big misses across the continents here. And what do you say when the market gets bid up like this? And then what do you do? Well, the song remains the same. You just continue to try to follow the trend, and the trend for the day, I would be day trading, or at least trying to pick a couple of trades for the day in the direction of that trend. Now, the overall picture obviously remains up and remains well bid up. The weekly charts, the monthly charts, they still look great. Yeah, they're still stretched, but they still look good. So, buying dips right now would be in the cards. But you have to be careful, and that's what I mentioned yesterday. You're long a ton of stock, and you look at the E-futures when you wake up, and you see down 15 and a half handles. And believe me, a lot of people probably got out of their positions, their long positions, because when you see something like that, the emotions start to kick in, and that's not healthy. So you don't want to be worrying or thinking about your positions while you're sleeping. That means you have too much size on. So you might want to kind of either step it back a little bit or at least buy some protection since it's very cheap. Now, I think that there's something bigger brewing. It's not. Is it a one-day wonder yesterday? It may be for the next couple of days, but I want to point something out. We have a week prior to expiration. Generally, markets they start to get very bullish the Thursday, Friday, and even today. Today, we're up a little bit in the ES contract, but I think today the call would be to look to buy weakness, any weakness you want to buy going into a weekend in the summer. There's nobody around in the afternoon. The market just starts to continue to grind higher. So that would be my call today, to look for stocks that maybe really didn't recover too much off of yesterday's sell-off, and really because of no reason just to sell off, you might want to look look for a buy entry in those stocks. That's what I'm going to be looking for today. I was looking for a wait and see mode yesterday, see if we would get some continued follow through for this morning, and it looks like that the markets are starting to get bid up again. So that's going to be the call, really. I wouldn't be looking to short anything yet. The market didn't give us any signals that, hey, I want to get short. So I would be cautious on the short side, and be still looking to buy pullbacks. Okay, so let's take a look and see. By the way, the indicators that I showed you are still poorly lagging price action of equities. Okay, so that means that we still have some divergence out there. Yeah, I understand that divergence hasn't played out, but even though as a technician, a market technician, you need to be aware of what could possibly happen so you can change and adapt your trading plan. Okay, all right, so let's take a look at the ES. Could this just be another bull flag like the previous three? It could be, and it definitely is one right now. We're holding above the 20-day moving average, so if we get some follow through, I think today is not gonna matter. I think today will still be an up day, obviously, unless something comes out, and that changes minute by minute here as the market opens at 9:30. So whatever I tell you this morning could change at the opening. So just please remember that. So could this happen? Just be a bull flag and we run up back to the upper end of the channel? It's possible, but again, I think when somebody says, "Oh, we might miss their payment," that means that they're struggling. Something really is wrong with that Portugal bank, and I think that banks are having problems, and I think that will resurface. As well as some China woes, and that's going to really send this market tumbling, at least for that correction. All right, not a crash, but at least for that 10 to 15% correction that we're looking for, and especially in the summer months when you have weakness to choppy price action going into the fall. I think it's a recipe for it to happen. Now, it never happened. The sell-in may go away, of course, because the Fed is induced in pumping liquidity into the market. So that did not happen, and the Fed knows about all of that stuff. So believe me, they're well informed of what's happening with the market, and they want to make sure that the market, all the work that they have done, doesn't go away by the wayside. Okay, so you got to remember, you're fighting the Fed if you're looking to get short, and that's the reason why we're up at these lofty levels, because nobody wants to fight the Fed, and also central banks around the world are doing the same thing. All right, so we have the ES. All right, now we look at the selling. We have bigger volume selling as we have, and look at the volume to the upside. It just gets depleted every day as the markets move up. Now remember, one day you have 2 or 3 big nasty down days that'll wipe out a month's gains. So just remember that. Be careful if you're extremely long. All right, transports. I think the transports held up very well. I mean, the daily chart. If you go to a 5-minute chart, I could show you. It was really nasty on the opening. You could just see a 1-minute a candle here. It dropped lower. Here's the drop from the previous day. I don't have the data, but if you looked at the previous day's opening, we gapped extremely low, and then we just started grinding higher, as you can see here. So it doesn't look as bad, but it was. If you looked at the DJT, the Transportation Index, you would see what I'm talking about. But again, holding up well. I do think that you're going to see this pivotal low here at least be tested at one point in the next few weeks. Okay, let's take a look at diamonds. Diamonds, same thing. As you can see, the transports and the ES held their 20, where the diamonds, which is the Dow Jones ETF, did not. It actually tested 34 EMA. So interesting. All right, we do have some market weakness in a lot of the leaders. Now, talk about the leaders. Look at the IWM, the Russell. Literally just took it on the chin here, wiped out the 20, the 8, the 20, the 34, and the 50, and is below the 50. Looking to now next target test the 200. Now this is what's scary here, right? I mean, this is what you want to be careful with, because you have one of our leaders really breaking down. Now we've seen this before, and then all of a sudden the Russell plays catch up. But you have to be careful. You also, what I'm looking at is another thing is the banks. I think with that Portugal scare, we have Wells Fargo reporting, by the way, today. I believe it's today. You got to look at the other big ones, the Citibank, the Goldmans, the JP Morgans. They're starting to roll over a little bit. And if you look at them on the daily chart, even on a weekly chart, you would see what I'm talking about. They're starting to break down at the market tops here. So we have to really be careful and really watch what's happening, what's going on with the banks, because I think that if the banks do start to break down, and along with tech, that's gonna cap this rally, and then we would have a short-term local top in place. Okay. So anyway, here's the IWM, and then lastly is the Qs, which held the 20-day moving average. So the ES and the Qs and the transports held. Diamonds and IWMs broke well below that. So a little bit of a mixed market. And again, we have a market without memory again, right? No follow-through again to the downside. And that's why you don't want to get short unless you have a good size account that you can say, I want to get short a little bit. I'm willing to add this, this, and this as the market runs up. That's fine. But if you're trading with a minimal size account, you don't want to be doing that, because that will definitely hurt your account, and there'll be a lot of making up that you would need to do. So try to wait. I think the best thing to do is really wait until the market. But believe me, you'll have plenty of time. Look at where the market has gone just since April. You'll have plenty of time to get short the market. The market just doesn't go straight down. I mean, it'll chop around and sell off, create these bear flags this way going up, and that's where you want to start looking to sell into resistance. All right. Hope it helps for today. Again, remember, as of right now, the call will be look to buy weakness. Look for stocks that haven't really fully recovered yesterday's loss. And again, as long as the loss was just because of the sell-off, that's what I'm looking for the play today. If something does happen, obviously we would have to reevaluate. Okay. Have a great weekend all, and I'll talk to you on Monday. Take care.